everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, July 30th, 2018. So we've seen the market act a little bit strange the past couple weeks, and it's what I'm going to go over is, you know, how when things don't go as planned, how they're managed and what you do, because we run off of this predictive analytic model, and basically we've had time for the past really 10 days where we were expecting the top to come in and the market to head lower. We knew we had sentiment that was hitting extreme bullish sentiment readings. So on this model, these metrics were looking lower. We had technicals that were looking lower, and then on top of that, we also had internal divergences. So this is the amount of stocks that were trading above the 50-day moving average. You can see that was diverging as the S&P was making new highs. On this is the NIAD, the advanced decline. You can see this was heading lower as the S&P was making new highs, and we also had the McClellan oscillator that was diverging. So on the the predictive analytic model, we had time, sentiment, technicals, as well as internals. And on Friday, we had the GDP numbers, and I really believe that is something that was holding the markets up, was the anticipation of the good GDP numbers, and they did come out very, very good, and that's fantastic for the economy. But what happens is when there's the anticipation that the market's going to go higher on it, and they kind of run it up into that day or into the announcement, the price is already built into whatever number comes out, and unless we were hitting a 6 handle or something that was going to blow the doors off, the end result most likely is going to end to move to the downside. So this is what I put out in the morning notes on that Friday, was that it's hard to say, to come up with different ways to say that the long side is not as safe as many think. When all of the metrics of the model get ignored, like we have just seen, it often ends in a violent reversal that sheds many points in just 2 to 3 days. So we know when the low date is. We already have that down, and like I said, the fact that we kind of eliminated some of the days, because we were expecting the top to hit going all the way back to, I think, to the 14th or 15th. So it got ignored the whole time. So what happens is these dates don't change. So the support levels and the targets that I'm looking at most likely get hit in a very, very short amount of time. And that's what I mean by these violent reversals that shed a lot of points in just 2 to 3 days. Because the low date it's not that far away. I'm going to give you a little clue on it. But the more important thing is, after this low date it comes into play, what Woody is looking for is in August a conclusion, and he's looking for a clipper to hit. Now, why is that important? Well, here's the reason why. This is the last clipper that he saw. After that, we just saw big moves that were going to be violent to the downside on this, and this is what is setting up right now, is this next clipper. So to know the low date is going to be very, very important, because what's going to happen is, as we sit there and if it continues lower like I believe it should, everybody's going to start turning bearish on the markets. And when they start turning bearish, what happens is they're going to start shorting it, and when they start shorting the market towards the low date, this is what happens. We get these massive reversals to the upside. They all get squeezed out, and then they start jumping in just as the market's about to head back down again. And that's and it's the next move that's going to come down that's really going to get, tear some portfolios apart, unless you know how to position yourself. And in the next, I think August has always been a great month as far as big moves up and down. And I've said this plenty of times in these free reports. You don't have to be in trades every day. You just need to sit there and make these 100, 200 point moves, 8, 9 times a year, and you're going to outperform 99% of the people out there. So we're setting up for a move to come to the downside. Once that completes, I believe we're coming up, and I'm not even counting out that we're going to take these highs out. There's a number of reasons that I've gone over that with members, and I still believe that once this low is made, there's going to be a nice move to the upside. So the anticipation is going to be for anywhere from a 75 to 100 point move to the downside. 2763. This is the 50-day moving average on the daily. If it comes down there, we're looking at a close to an 80-point move that we got short on, because remember, this was the trigger. This is also in the morning notes. Aggressive traders would get short at 28.36 and then maybe add more with a break of 28.30. So if we go back and we look at what took place on Friday, this was the trigger right here. We had that little gap up, and then once it took out these lows, that was the trigger, and once it took out these lows, that was the trigger. Your stop was just placed up here, so it was limited loss. But don't get me wrong, we got stopped out on our first trade, and like I said, it's going to happen. This is the market. Nothing is 100% correct, but we took got stopped out of it. It was a 1% loss. It happens. I'm up many more percentage points than 1% loss that I've had, and you just brush yourself off. But the point is, just because we got stopped out on this move, it doesn't mean you go long, because the metrics of the entire of our analytics model was pointing lower. So what happens is you get all these people that jump in on this move right here, and before they know it, they're in a buyer's remorse trade, and they're underwater. And since they missed really the entire move, they start buying dips, and then eventually what happens is you get a panic sell-off, and most likely that panic sell-off is going to come right in between when we're looking for that low date. And then from there, like I said, I would not be surprised at all to see these highs taken out, us making new all-time highs where everybody is bullish on the market, and then that is going to set up for the Clipper. So like I said, there's going to be a lot of money that's going to be made in the next 4 weeks, and I'm really looking forward to it. So let's just go to our regular analysis here. On the 60-minute chart, we had bearish divergences here. I really thought they were going to come up and at least close this gap right here at 28.53. They missed it by a couple points. Now this up here, this target was actually given all the way down here. I was not long as we came up here. I actually got short and got stopped out, and then got short again. But my point is that I thought we were coming up and closing this gap, and never did. So now this is the bull bear line, this 27.92. If they take that out, you're going to see a reaction trade most likely down to this 27.75, which is the 200-day moving average. If that gets taken out, then we see panic coming down into the next bull bear line, which is the 27.42. Most likely I see that happening into our low date. From there, we may even get a break of it and come down and test these. I'm not 100% sure. But once we get into the time period where we're expecting the low, sentiment is going to turn bearish. And then what we do is we simply look for where support is going to be. So if support doesn't hold here, you just go to the next one and look where the next support is. You let the market tell you what's going to happen, but you have this unfair advantage of knowing when to expect these markets to reverse, and then having sentiment to be able to back it up. So looking for the support levels, or using Elliott wave. This is one right now where it got extended, and this was one of the reasons why I really thought that this was the high right here, was because we had 1, 2, 3, 4, 5, and this looked like it was going to be the move to the downside to start the next move down. It got extended. So what happens? Do you want to get long on a wave 5? This is the final wave, and this is the stuff that we explained to members. Is yeah, it was wrong on the actual time period for the reversal, but there's so many people that were saying just jump long right now because we're breaking out to new highs, when you had the wave structure that was looking lower, you had time that was looking lower, and you had sentiment that was looking lower. So right now, if this is the 5 waves, which obviously I believe it is, the landing areas, we went through the first, this is the bull bear line on the upside. This is what the bulls have to get through to try and come up and test this level here. That's right around the 28.15. If the bears can push it through this 28.92, 2892, 2020. I'm sorry, 2792, 2788. Reaction trade's going to come down to that 2775, 2770, and this is the landing area for this move right here. And all it is a 50% to a 78% retracement, and that typically happens on these moves, and then it sets up for the larger move to the upside. And when that happens, this is where everybody's going to be bearish on the markets. We get that move up, and once we start coming up and testing these highs, everybody's going to be bearish, bullish on the markets again. And again, that's how it sets up these clippers to the downside. And it happens, every year we see the same thing go on, and you don't have to be in too many of these trades when you're making that many points. And like I said, the next I think over the next 4 to say 6 weeks, there's going to be a lot of money to be made, and things are going to, it's going to be fantastic. But again, this one, the time period was wrong on it. It didn't mean you wanted to get long. You just waited for the sell trigger or the short trigger, which was these right here, jump short, and now you ride it down, and that's how that's how this whole thing is going to work. So right now, what we need to see is the bulls, the bears, they're going to need to push it through this support level. If they do, then I'm expecting these targets to get hit. The bulls need to push it through the 28.16 to get any momentum going. The next resistance is 28.29. So with that, hopefully this helped you out. Like I said, you really want to know when the low date and the top date is coming, because there's going to be a lot of points that are going to be made in the next 4 to 6 weeks. So until next week, have a great night, and I'll talk to you guys later.